child benefit charge. It's been around for a while. Rebecca, can you fill us in on any changes this year?
Tom, this is an unpopular subject, both with agents and with taxpayers. Once again, and we've got a number of instances of this in the tax system now, once again, it relies on knowing information about more than just your client in order to complete the tax return. So let's go through the basics. So you'll need to establish on a year-on-year basis what your client position is. Are they in the household? And remember, this one applies to a household, not a married couple, or let's say not necessarily a married couple. So you need to look at the household. You need to find out whether any child benefit is being received into the household. And then you need to look at the income of each individual in the household, let's call them a parent, each parent, to see who has the higher income. Now, if your income is very high, it's very common now that you just make an election not to receive child benefit, and I'll go through precisely what that means in just a moment. If you have made the election not to receive child benefit, that will need to be revisited every year. So here are some things that your client is expecting you to do that your software doesn't do for you very easily, and that requires a bit of thought. And it's one of those things, you're on a hiding to nothing, but you've just got to do this in order to look after their tax. Now, watch out for the trap. So now let's go back onto this. What is the election not to receive, and what is the difference when child benefit is not claimed? Okay, let's have a little think about that. This has been in the newspapers quite recently. I saw a story in the Times in the last few months about this, about mothers missing out on their state pension rights. So when a couple now have a child, when they go to register the child, particularly if it's their first child, they'll be given the opportunity to claim child benefit. If they're a high-earning couple, they may remember that there's something about not getting child benefit if you're high-earning, and they may decide not to claim the child benefit. That's the wrong answer, because if they don't make the claim, then the mum won't get the cover that she normally gets from being a child benefit claimant that protects her state pension rights. So they need to claim, and then they need to say, but don't give me the money. So it's a bit of a complicated one. So that's the election not to receive. You've actually claimed it, but you've also said, but don't give me the money because I'll only have to give it back to you at the end of the year. Back to the slide, let's have a look at what else you need to think about. So it is the member of the household who has the higher income that actually ends up paying the high income child benefit charge. Quick reminder, it clicks in at 50,000 and you have a taper process that takes you through to 60,000 when all of the child benefit becomes payable as effectively a tax charge. So it's at 60,000 you would elect not to receive child benefit. That would be the income of the higher earner. Now, one particular thing to watch out for that's a bit of a trap is that if the client has elected not to receive child benefit and their income falls, and let's say their income falls to 55,000, so they would actually be entitled to half of their child benefit, then what you'll need to do when you're completing the tax return, you'll see the reduction in income, then they need to retrospectively reinstate the claim. Now the client can do this themselves, but unfortunately the online form for actually reinstating your claim only applies going forward, so they'll need to contact HMRC separately to ask for the claim to be reinstated for the relevant tax year, 15-16. And then comes the complicated bit. And the complicated bit is that if you reinstate the claim, they will receive the full child benefit amount. Now, we've just identified they're entitled to half of it. So your client will receive a large payment, probably direct into the bank account, and then they will have a further tax liability to pay back half of it. What a complicated way of going around it. There were a lot of people who said this wasn't the right way to do this. I was one of them, and I still think it's not the right way to do it. I think it's a bit of a nightmare. So again, it's something your client expects you to do as part of doing the tax return. It's out with the sort of normal run-of-the-mill things, but you mustn't miss it. If a client's got 5 children under 16, it's a lot of money. Watch out for that, Tom.